Welcome back, everyone, to the Passive Road to Retirement podcast. We are your hosts, Andrew Jarrett and Nick Cooper. Today, we're joined by Terrie Schauer. With 20 plus years experience as a real estate investor and property manager, Terrie is CEO and founder of MyRoom Gestion, a property management and real estate consulting group based in Montreal, Canada. She's a leading authority on applying mindfulness principles to real estate investing and has written the #1 best-selling book on the topic, Mindful Landlord. Co-host of 2 wealth and real estate podcasts, the Mindful Wealth podcast and the Real Estate Investors Club podcast. Her clients include business owners, executives, professionals who want to hedge the rat race and gain financial freedom through real estate. Her passion is to help fellow investors act for both profit and peace of mind. The key areas of her expertise are real estate, with a focus on holistic wealth, financial freedom, female excellence, and investing, and beyond. She has given keynote addresses at the Canadian real estate conferences on these topics. Terrie holds a PhD and a master's degree from Oxford University. She is a 2-time world champion in Brazilian Jiu-Jitsu, and her best-selling book, Mindful Landlord, is currently available on Amazon. Terrie, welcome to the show.
Thanks for having me on, guys.
Awesome to have you, Terrie. So I liked how you said in your, the intro, the holistic wealth. Like what does that mean to you?
Okay. So I think, one of my beefs with the real estate industry, or at least the real estate coaching industry, is that it focuses on what I call the 3 Ds: more deals, more doors, more dollars. And that the metric of success that people talk about is those 3 metrics. And so it can sort of pull you into living a lifestyle that is not ultimately personally fulfilling. It might mean that your bank account's full. I call it like the bank account Olympics.
Yes.
But ultimately you have to look at, a whole person and like, what are you doing in your practice of real estate investing? Because we talk about it as a business, but like ultimately, if it's your lifestyle, it's kind of like a practice that you have. So.
No, it totally makes sense. And I think kind of expanding on that, I'm in partnership with my wife as well. So she's in real estate. What's it like being a lady? Do you have any advice for all these ladies that are up and coming now?
I actually get this question a lot. And I think the boring answer is that I really, haven't had that much difficulty, I guess, due to being a woman. I mean, other than, the whole construction chapter, because I started, when I was 25 and like, I'm not very tall, I'm blonde. I also live in I have an accent up here in Canada when I speak French. So people had all kinds of, stereotypes that I didn't know what I was talking about. And so, I mean, it was a little bit difficult to break through those stereotypes initially, but like once, let's say the plumber or the mason realizes that he's actually talking to someone that he can't pull the wool over my eyes, that was pretty much dispelled by knowledge. The other thing that I will say is that, I now coach and I speak at real estate events, and like, I very often it's like 10 to 15% women in the room of investors. I don't know if that's, what the stats are down where in the markets where you guys are, but I would say part of it has to do with, an interest that I think, just like maybe there's less women in engineering kind of naturally, like it self-segregates. I think investment properties are not necessarily something that attract a lot of women. If it's not, let's say, something like Airbnb, I think is a more like feminine space in the investment space, but like I'm in multifamily and that's like pretty male dominated space. Though I don't feel like being a woman has really been a drag. Except for maybe, in the beginning, I see a lot of like young female investors coming up who have a bit of imposter syndrome. And I think even though a lot of people might suffer from that, I think as a woman, it's even more difficult because you look around the room and there's nobody who looks like you. So.
Sure.
That's a great answer. I think so. If my wife does it as well, I think a lot of skills that women can bring in that, not really the soft touch, but if you're doing anything like a direct to seller, they seem to get a lot further than I will on the phone. So something that haven't been a little different, I think a lot of times is that advantage, especially with people like, older men that usually are the ones that seem to be running most of the stuff or trying to sell it now,
Yeah. I mean, I don't know, like I'm more kind of like in a, multi-family space where like, I don't, if I'm dealing with someone, it's going to be an investor, who in face of me, I don't do too much single family, but I'm sure that there's lots of female realtors who do very well. And it's not like in the investment space, it's not like there's less female realtors. There just seems to be less multifamily female investors. So,
okay.
Yeah. That's a great point too on the dealing with contractors. Now you've done property management 20 plus years. I guess 2 questions. Do you self-manage, all your stuff, or do you have third party, or how does that work?
Yeah. So, I mean, like my main hat that I wore through most of my career was as a property manager. I started like the typical thing up here is that people start off with 2 or 3 small properties, duplexes, triplexes, that kind of thing. And then they get tapped out of borrowing capacity. And I kind of ended up there and, for like 10 years, so like for half of my career, didn't figure out the financing to move to the next level. And what I did at that time was, because I couldn't sort out the financing, was like, I want to progress. So let me build a management portfolio. And then, because sort of the secret sauce of my business model was management. So then I ended up, managing a bunch of properties for other people. As time has gone on, I'm doing less of that. I now, half my units are in a sub-market that's about an hour and a half outside of Montreal. So that, I don't have boots on the ground there. So I have managers who manage on site, but my head office still does all the administrative stuff. And I'm kind of running the same model actually in Montreal. I have somebody who deals with the more of the on-site stuff, and we kept the admin, which, as you can tell by my dislike of construction, that kind of explains that.
Yeah. Hey everyone, hope you're enjoying this episode. Are you ready to maximize your real estate investing to its full potential? Join us at Level Up REI Coaching and take your life and business to all new levels.
Send an email to nick@levelupreicoach.com. That's Nick, N-I-C, at levelupreicoach.com.
Do you have any pointers for people, either doing their own asset management or, their own property management, something to watch out for, or, any pointers dealing with management companies?
For sure. So look, I mean, I think if I could just, make kind of a blanket statement, I would say, unless you're immediately jumping to a very big level, I recommend that people manage their own property at the beginning. So if it means taking 6 months or a year, managing the first triplex so that you really understand what's involved. And then when you're looking at scaling, then maybe it is part of your business model to hire a manager. And like, it's actually quite rare to find investors who are very good managers. So I think, I don't know the statistics, but like, I think that a lot of people, when they come to scaling, need to leverage some kind of management service. And if you look at me, like I started out as a property manager, but I do maybe now 25 to 30% of the management of my own investments. So I think eventually, as you start scaling, you need to kind of either outsource or build a team where you're not the one, going out there with the screwdriver. So, then we move to the next phase, which is managing the manager. And, as somebody with 20 plus, experience in real estate, like I just in 2022, really got taken for a ride by a property manager in the submarket that I invest in. And, I went through my due diligence when I picked the person. And then after 6 months, it was clear that like they had no control over who was paying rent, stuff was missing. They weren't doing records properly. They weren't, doing their maintenance properly. And took some time to figure that out, because when you don't live in that market, it's like you're not going to the property every day. And I didn't have direct contact with the tenants. And so it, took time for that to emerge. And luckily there wasn't any major fraud or anything, but like it was a real mess. So, in terms of doing your due diligence in that process, like obviously you have to, interview multiple managers. You should speak to other clients who have had experience with them. And then, kind of as an ongoing thing, I just want oversight. And that's where it comes in, that it's really important for you to do your own management, so that when you're overseeing what the person is doing, you have to check. So even if you only go out to the property every 3 months or every 6 months or once a year, keep the bills that they charged you for, make sure that this faucet was changed and this leak actually happened and that thing was replaced the way they said. So like, track or have someone else go and double check, or have them send photos. Like you need to have some kind of checking for maintenance that's done. And then you need to, like, we actually have an internal bookkeeper who goes over the bank accounts and goes over the money to check. And I have my property managers actually work on my software. So they just have an access to my software. They get into our platform. So they're doing the data entry. They're doing some of like the rent recording in there. But then my internal bookkeeping person is going over those numbers and making sure that the bank account reflects what actually happens, so that on a monthly basis, we catch anything that's off. So anything that you can do to like insert kind of checks and balances to make sure that the deliverables are actually getting delivered.
Yeah.
It's almost like having like government, you know, the three well, Canada is probably a little different than the US, but having those checks and balances between the three branches. So it's how do you manage or measure those KPIs, hitting those with your property managers? Because you, as the asset manager, how do you go about doing that?
Can you be more specific?
Oh, so if you have a key performance indicator, how do you actually have someone hit that? Like, say I want to be at 90% occupancy. Like, do you have an incentive, or and also how do you track that?
I mean, like, we're more hands-on than that. So like, I'm really, really directly involved. Like, let's say, actually in all the markets, like I take care of the rental myself. So either I have a rental agent who's working in that particular market, or I have a staff member in Montreal who does the rentals, even though a lot of property managers offer that. That's like really something that I want to control, because sometimes, property managers, they want to get a unit rented, but at the same time, are they really maximizing your rent? They will usually try to place non-problematic tenants because they don't want to have problems any more than you do. But in terms of really like maximizing the rent, sometimes they kind of just want to collect their fees and get it done. And so, I can't really give you like a scientific answer for that of KPIs, but it's more that like, we really have it like a blended model, like it's as if the brain is at my head office in Montreal. And then there's like little, sort of outposts of people who do things and then report back, or they're working in my software. So I know we actually do the leases electronically from the head office. And then, maybe the property manager will take care of doing the, the walkthrough or something.
Okay.
So they'll basically just show the unit is all you're really doing. Do you guys have like your own maintenance teams then too? Or do you have, the property manager, like the little satellite branch, do that stuff?
Yeah, well, so like in the, in the submarket where I work, like they have their own team. Like it's a full service property management company. I just only use them for the construction part. And in Montreal, it's blended. Because sometimes my property manager actually has a better contact than me here. And so often what we'll do is like, I know, for example, my plumber is better at this specific thing. So like, okay, I'll rather send my plumber. I know that like, it's actually really down to, with exterminators, for example, it's actually down to the specific pest, because I know that I have a really good exterminator for bed bugs, but like for everything else, they overcharge and they're not so good. So like we've really blended our contact list.
That's a pretty cool model.
I like it.
I like that.
So go ahead, Andy. I'm talking over you.
I know. So you have, two-time world champion Brazilian Jiu-Jitsu, right? So I guess, from what I always hear, martial arts is very disciplined sport. Does that transfer over into your real estate investing? The discipline on picking your investments and markets?
Yeah, no, for sure. I mean, but I think, I wouldn't say obviously discipline. And like, my husband and I have this argument all the time where I'm like, you don't get to be world champion just like that. Like it takes really, hitting all of those things, and you got to watch a weight category sport. You got to watch your weight. You got to train. There's like so many things that you have to have your eye on. So I think like in terms of personal discipline, I think I've mastered that like fairly effectively. But what I really got from the martial arts that, has allowed me to do what I did in real estate is this sort of performance, optimizing of your mind. And like, when I talk about mindfulness, that's like a huge topic, but if you understand how your mind functions, so there are, for example, 3 levels of consciousness. You have the thoughts, you have the emotions, and then you have behind that, this kind of presence that's called the watcher. And at any given moment, you can't shut those things up. Like you can't shut off your emotions, you can't shut off your thoughts, but you can choose which one of those levels you identify with. And that becomes like a crazy performance tool. And like, I really learned in jiu-jitsu, because when you have to compete, like, and actually kickboxed semi-pro before I started jiu-jitsu. And that's even worse in terms of like the stuff that goes on in your mind. And so if you're like down here with your emotions freaking out, when you have to be focusing on your performance and like where you have to be in your match, there's really no way that you can perform at the best level. And so, learning to kind of use your mind as a performance tool, like when I talk about mindfulness, that's what I mean. And then obviously, like, those are such high stress situations that if you then apply that to real estate, it's like kind of like a light version,
Yeah. Yeah, much different.
Yeah. And I mean, if I can just, give you like a little anecdote, like for me, I'm actually a bit of an introvert, which at this point might not show that much. But I was like, suffered from like severe shyness when I started what I was doing. And, networking, they say like real estate's a people business. Like I was having heart attacks, just like talking to realtors or like going to the bank, going to the notary, like dealing with those people. And again, I was 25. So projecting the confidence to actually be able to do that and seem serious was very difficult. And I used to have like, major anxiety, never mind networking events where you have to go and tell people what you do and introduce yourself. And so like learning to manage my emotions and then, that sort of performance thing and like applying that mindset to those situations where I was super uncomfortable. It really made a big difference.
No, that's great. So kind of shifting gears a bit here, 2023 is going to be an interesting year. How are you going to prepare for it?
You know what? I think like the last like 3 years have been super interesting years. So like, what am I going to do? Like,
different kind of interest.
I got my surfboard out, like I'm just surfing.
Ride the wave.
No.
What's the next wave?
Yeah, no, but so to be more specific, like in Canada, we actually, so we didn't go through 2008 the way the US did. And we're in a pretty big correction right now because like our central bank has been raising interest rates pretty much the same way as the US, but Canada's like number 3 on the list of overvalued real estate markets, or it was at least before the, the correction started. And so like we've got like a real capital crunch here. So even though there are starting to be deals, people haven't totally adjusted to bringing their prices down, but it's pretty difficult, like, because people just don't have money, right? Like if they can't liquidate, it's difficult for them to find money to like reinvest in something else. And so we've gone through this like really interesting reversal where before you couldn't find deals and money was everywhere. Now there are starting to be deals, but there's no money. So then it becomes, you got to shift, who you're sort of courting. And then, the money side of it becomes more interesting. Whereas before it was a concern was about deal flow. And I think that in terms of preparing for the upcoming year, like that's really what it is, picking and choosing the deals that are going to start coming and making sure that there's enough liquidity around to actually, position oneself on a good deal when one shows up.
So I think most investors that we, probably listen to the podcast here are in the US. Can you kind of explain what's kind of the difference between the US and Canadian markets? Is there much of a difference?
Yeah, I mean, for sure. Like, I think, first of all, our banking is very different, which is one of the reasons why we didn't go through the 2008 crash. Credit is much more of a challenge. Our market is just like a whole lot more regulated. So, for example, right now, the Canadian government just came in with a law that no foreign buyers can buy residential property. But listen to this, it doesn't deal with multi-residential. So we're talking about, I think I'm not sure if they drew the line at a triplex or a fourplex, but it's only single family homes, duplexes, triplexes that foreign buyers can't touch. But the minute you get bigger than that, the government's really not concerned with it. And then there's also, they haven't totally worked out the fine print when it comes to company ownership. So if you have like a Canadian incorporated company here, what does the ownership structure of that have to be for an American buyer or co-owner to get into that? That's like, it's not clear right now. So, I mean, those are sort of 2 points. And so how is that different? Well, it just means that, another data point. So apparently 1 in 20 houses in the US is a foreclosure. 1 in 900 is a foreclosure.
Whoa.
Wow.
Yeah.
That's
that is different. That's quite a delta.
Yeah. So like we have much less, distressed properties, much less people liquidating under, poor circumstances. Everything is just much, I would say, slower. And it's as if you're kind of less able to make mistakes because those checks and balances are there. And like the government is really trying to prevent people from putting themselves into financial trouble.
So if I was an American, I want to invest in Canada, like as like a traditional like syndication, could I do that still?
Yeah. Well, I mean, provided that you're investing in 4 doors and more.
Right.
But usually that ends up being kind of what syndication is anyways. Like there's not, I mean, I shouldn't make blanket statements. I think like Toronto and Vancouver, which are like, actually, I think 70% of Canadian equity is tied up in those 2 markets. So like they're really big. Us in Montreal, we're much smaller. And in there, I think there's more of that kind of stuff with single family homes. But generally speaking, when people do, syndications, it ends up being on bigger multi-residential properties. And for that, you just need a Canadian partner on the ground. You can go in it alone, but definitely in my market where everything transpires in French and you really do need local knowledge, you probably should have a local partner.
Yeah, I would hope so.
That's funny. So Terrie, most people have, some kind of deal that's gone bad, if they've been investing long enough. Do you have a deal like that, or one that just didn't end up how you thought? Maybe you could explain that to the reviewers.
Yeah. As you're asking the question, I'm like, which one am I going to tell you about?
Show us the dirty laundry.
Yeah. So I had this deal that we closed on it in April last year, when I realized maybe closing on the deal wasn't as good as it was when we made an offer on it 4 months before. So it was like kind of the time when you couldn't get deal flow. And we had this undervalued Aplex that was selling for about $100K under pricing at the time. Okay. And it was in like the worst part of Montreal, which is Montreal North. And I usually invest in low income areas, but I never went there because that's the worst area of Montreal. I'm like, okay, let's see if my business model works there. Let's see if my management team can handle it. Like, let's just run an experiment. It's $100K under. It was a pocket listing. So like, let's just close on this and see how it goes.
Sure.
And like the last year really has been like managing. I think I was at the rental board with 6 out of 8 of the people, and like not just once, like 2-3 times for non-payment. We got like a woman in there who it's actually kind of sad. Like she had poo in bags like in her bathroom. Wow. And of course our rental board laws here, like you can't evict people. So like she's still running this. Like the place is infested with cockroaches and like we can't get her out, even though like she's contaminated, the entire building anyway.
Is the rental board like your type of like your public housing type? Is that what it is, or what is rental board in Canada?
I mean, it's tenancy court. I don't know what you guys would call that.
Okay.
Yeah,
like I think
housing court basically. Yeah.
Yeah, state has a housing court. Like our one is called the Administrative Tribunal of Housing.
Oh, that sounds formal.
And anyways, no, so this deal, and like I did it as a joint venture with a partner of mine who luckily has a sense of humor, because every time like, we need to cough up another $1,000 for extermination, or like somebody else put a hole in the wall, or like, the latest one send us a cease and desist letter or something that we have to fix this and this and this thing, and then we have to actually do it. Like, so yeah, that's my deal. That maybe with retrospect, we should not have closed on that one, but like we were just, everybody's eyes were bigger than their stomachs at a certain point. And yeah.
How do you eventually get them out? I mean, is that like a law that came up after COVID, or is that just has it always been like that for evictions?
I mean, we have like you got to think of us a little bit like the California of, or New York, right? Like we have very strong rent control, and it's like very difficult to evict. So like eventually you will get them, but it could be a battle that takes a year. And like, for us, the best thing is when they don't pay their rent, because that is pretty decisive. Like it takes about 6 weeks to evict someone for not paying the rent. But everything else, you're looking at like a year or 2 of like a war of attrition and multiple appearances. Wow. And, one time they didn't send her the letter to appear in court. So we showed up, we paid the exterminator, we had all the witnesses there in court. The woman doesn't show up, and the judge is like, oh, look, we didn't send her the letter. Like, okay, well, we're out, almost $1,000 for getting everyone together to come to the rental board to sit down and witness. But okay, we can't hear the case today because you guys didn't send the letter. So
yeah,
anyway.
I have properties in New York, so I'm very familiar with that. We had a similar thing. We send certified mail. You're supposed to send certified and just like a normal letter. And the tenant came to court and said she never got notice that she had court, which makes sense, right? So the judge still pushed it out another month.
Beautiful.
She was there.
here.
Yeah, exactly. Yeah, but she didn't know she had court, but she was there.
Yeah,
So yeah, I
beautiful.
know how that goes. Yeah. Well, so our podcast name is, the passive road to retirement. What would be your number one strategy for a passive income investment, or, strategy for somebody, maybe they're just starting out or advanced?
I mean, like, look, obviously you're talking to a real estate person, so I'm
Yeah,
pretty
right.
biased towards real estate, and I'm pretty biased towards, just the like buy and hold rental property game. Like, it's not always super sexy, and like sometimes people are like, oh, Terrie, I don't know, like I don't know how you do what you do. Like, either one version of it's not sexy enough, like the returns are not good enough, or else it just takes so much patience. But it's really, I'm all about incremental improvements. And I think this is another thing that comes from my sports background, is that, like, for sure, the first 2 years you're training, like every time you show up at the gym, you learn something new. But
Right.
if you're trying to get to the top of something, like, you're fighting for millimeters every time in performance. And, but the cumulative effect of those millimeters becomes huge over a 5 to 10 year time period. And I think the type of real estate investing that I do, which is buy and hold of, like, they're not huge properties. Like, a lot of them are, 6 to 8 units within the grasp of most people who are investing. And because those things compound, and because if you have multiple doors, I'll have 8 chances to raise the rent. I'll have 8 chances to cut costs. Whereas if I just have one tenant in one property, then I'm kind of limited with what I can do with that revenue stream. Like, when I buy an eightplex, I have 8 revenue streams. So that the power of that, even if it's only $15 a year, $35 a year, whatever our rent cap is here, it's not huge. Like, a lot of the time our rent increases are like $30, but over a 10 year time period, what that does on your multiples of revenue, it really stacks up. So incremental improvements.
Yeah.
I love it.
What's your average cap rate on like a C class, property in Montreal there?
So we talk more in terms of like GRMs, like revenue multipliers. And so right now, in the height of COVID, things were selling at about 25 times revenue. Now it's really tough to give you an answer. Like, good deals are almost like as far down as, like, 16, 17, 15 by the time you're negotiated. And in the submarket that I work in, like 12 times revenues.
Okay.
Wow. It's definitely different world right now.
Yeah.
How come?
No, it's everything's changed. I think the last like 6 months to a year or so, from, like you said, you mentioned about how it was money chasing deals. Now it's deals looking for money.
Yeah. Yeah. But I mean, it's such a, who moved my cheese situation. And I think this is also, like, a lot of people who've been in the game now for whatever, 4 or 5 years, they've only known up. And since I've been doing this for 20 years, I started when I was, 25, like, the market 20 years ago, like, it had time to go through some ups and downs. And, like, when I started, we were in a very slow upward trajectory where all you did was, took your tiny rent increases every year and hope to capitalize relatively, quickly because of the, GRM was low. But now, as everyone is in this kind of speculative mode and, like, money, throw tenants out, do this, up the rents, like, a lot of the fast talkers really couldn't make a mistake, and I think got overconfident. But if you've been in the game for a long time, or if you're in for a long term, it's like, okay, well, it's a shift. So now let me adapt to the new situation and not panic. And I mean, I have a pretty conservative business model anyway. So, I'm not, I don't have a yacht. I'm not driving a Tesla. But it means that right now I'm also sleeping at night. So.
Right. Yeah.
That's good.
Yeah. It's a good feeling, right? Not being stressed. So if you were in our shoes for the interview, what's one question you would ask yourself that we haven't asked you?
Oh man, that's really tough.
Yeah, right.
Yeah. No, actually, what? I have a good one. And on my podcast, I actually do, this is my last question, is what should we be talking about that we're not talking about? And one of the things that I feel like us in the industry where we do a disservice is missing discussing the lifestyle hits that we all took to get where we are. And I think, in a world that's determined by, Instagram feeds and, people trying to kind of show off of where they are. And like, I get it, it's good to celebrate where you are. It's good to be proud of what you have, where you got there. But people don't give that backstory of all the delayed gratification and all the sacrifices that they made to be where they are. And, if I can be very transparent, like, I started my business out of one room of my apartment that I had a roommate. I did own the building, but like I rented out, it was a 2-bedroom. I was renting out the other bedroom. I did that for like 8 years. And it was in a very bad part of town, which, gentrified slowly a little bit during the time that I was living there. But like, there were like, prostitutes on the corner, and there was drug dealing going on. And like, obviously Canada's safe, so it's not like it was a risk for security, but like, it's definitely not the kind of place where you're like, yes, I want to go live in that neighborhood.
Right.
And, I did that for 10 years until I had enough cash flow to pay the mortgage on the single family house in the reasonable part of town that I live in now. Yeah. And, I still have secondhand appliances. Like, if I'm going to make big capital investments, it's to do things that are going to bring me long-term cash flow. And so that means that like my daily lifestyle is maybe not as extravagant as someone else, but the upside of that is the freedom to not have that pressure of a lot of overhead costs. And it's also the fact of being able to then have the luxury to build a business without the stress that, you're burning cash at God knows what rate. So.
Yep. That's a great point. I actually was similar. I had a duplex I lived in. I bought it on owner financing and rented out my living room and the spare bedroom to 2 of my friends, and then rented the downstairs unit. And I was, getting paid to live there, but it was great.
Yeah. But I mean, like how many people, like when you tell the story of like, I'm a real estate investor now, I'm 45 years old, like this is my portfolio size, blah, blah, blah. Right. Like, how often do you just transparently, like open your coat and be like, no, but like, this is what I did for 10 years to get here. And like, yes, I'm here now. And this is how nice my life is. But like, just be, straight up about the fact that like, yeah, I house hacked because I had to do that at a certain time in my career. And I think we do a disservice when we don't be straight up with people about that.
Yeah. No, I think it's that whole quote. I think Gary Vee says, it took me 10 years to become an overnight success.
Exactly.
So that's exactly what you kind of put there, encapsulate it that way. So that's awesome.
Great point. Now, Terrie, how do people get a hold of you and how do they watch your podcast?
Right. So to get a hold of me, probably the best way to connect is just on LinkedIn. So it's my name, Terrie Schauer, on LinkedIn. I do also have a website, terrieschauer.com. Like you mentioned in the beginning, my book is available on Amazon. It also has its own website. Cool. So mindfullandlord.com. And then the podcasts, the Real Estate Investors Club podcast is everywhere where you listen to podcasts. So, and if you follow me on social media, like I will, announce every time there's a new episode out. So
sweet.
Awesome.
Sweet.
Awesome. Sounds good. Well, we'll get into our 5 to Thrive. This is our word association game. So this, I'm just going to list off 5 words right in a row and just give me the first word or phrase that comes to your mind. The only thing is you cannot repeat the same answer.
Okay. This is going to be tough. I can tell.
Nah, you got it.
Yeah. All right. The first one, property management.
Oh, my secret sauce.
Okay.
Rat race.
Get out of it.
Financial freedom.
That's the prize you want to keep your eyes on.
It's good. I like that one. Martial arts.
Oh, yeah, a great way to perfect your mindset.
And the mindful landlord.
Ah, that's me.
I like it. Well, Terrie, thanks for coming on. We appreciate your time, and it was great having you.
Yeah, thanks, Terrie. Appreciate it.
Thank you.